There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Futures have a positive tone as Alcoa kicked off earnings season. The market seems to have found its footing after Friday's dismal jobs report. Did Ceelo Green call a short-term top in the stock market? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after markets rebounded yesterday following Friday's volatility and gap down following the dismal jobs report. And rotation continues in this market. Scott, what's your short and intermediate take?
I think on the intermediate take, on Friday, the markets held where they had to. We weren't sure what type of correction we were going to have. That jobs number was pretty scary on top of what we saw in Cyprus, on top of what we saw before that with the Italian election. So there's been some volatility and some unknowns. And then, mix in North Korea into the mix. So all of a sudden, you really didn't know what was going to happen. All you knew is that 1538 to 1542 was recent intermediate support. You look at the chart here of the S&P, you will see that is right there. And that's exactly what we held on Friday. Then yesterday we pushed up a little bit, and now we're opening up a few handles higher. So I think it's going to be interesting. The bears are hanging their hat on the fact that we have this small head and shoulders pattern being built here, where if they want this to be the right shoulder, they're going to have to contain the action in the next day or so up into this 1563 area. Otherwise, this trend is just going to continue, and this 1573 will be another decision point for some bears that are trying to continue to roll up, make some choices with.
Yeah, we always look at the S&P, which is, of course, important to look at, but so is the Dow. What if we look at the Dow?
Well, you look at the Dow, I think we're not even 2% off the highs, after a big run in the first quarter, after historic headlines. And we've seen a lot of historic headlines in the Dow Jones over the course of the past month or two. So with that said, it pays to have that long-term plan. It doesn't matter who you are, how you handle your finances. You want to be an active trader, a macro investor. You want to be a stock picker. There's lots of ways to skin a cat here. And with that said, you just have to know which one suits you. And if you look here at the Dow, you will see, this is where we held. We held the 21-day on Friday. We held another intermediate trend. We did not even test this more macro trend. And if you go even further back, look at the trend that's been continuing here in the Dow ever since, that October 4th low. So at this point, I understand why people are a little concerned as you see where we are and the road we've traveled. But I still think this is not an all or nothing environment. You could be involved on the long side and the short side, and just be a little bit of a little tactical in the middle, using a tier system and trading around your positions based on the complexion.
Well, speaking of ways to skin a cat, there's been some opportunities in weakness in some sectors, like the home builders, the transports, even the banks, which have had a nice snapback.
Well, I think that's what guys are going to be looking for in like the transports. The transports and the Russell and the home builders all fell first last week, but had a nice snapback. So we talked about trading the snapback for cash flow, but then figuring out whether it can continue. So if you look real quickly at the home builders, for instance, as a good example, here's this intermediate trend. This intermediate trend that's been followed since, way back when last summer. You had two accelerated trends. This one broke and held, and then went back and retested that broken trend line and pushed through. Here we are on, this was Friday. It held again. Yesterday you had some follow through. Today it's probably opening up a little bit. I know for me, I'm long this. I scooped it up into this dip, and I'm going to be selling some. I'm not sure if it's going to power through. I'm not sure if it's going to be rejected or hold here for a bit before going again. So I think if you have, tier 2 or anything of that nature in XHB, sell some. Same thing goes for the IYT, which also, broke this key area, held, follow through. This is your sell point. So lots of different lines in the sand, so to speak, or battlegrounds for both the Bulls and the Bears.
Well, let's turn the spotlight to the food and beverage group, which acted well yesterday. Chipotle had a nice two-day rally and managed to close on highs, so possibly some continuation today.
Yes, this is a two-day move, and now today it might be on its third day. It's hard to always initiate on the third day, but this group itself has been very strong. Lots of nice activity there. You look at CMG after the move to the downside, it saw months back. Nice breakout here above a key level. My guys, we're looking at 330 yesterday, closed strong. I would say next real resistance here comes in at this peak, and this peak right now is about 351. So there is some more room still, but just be a little bit careful as it extends.
And a stock you've talked about for the past year or two, Dunkin Donuts, on another 1.3% added on yesterday after a nice 3-day move.
Yep, and this shows you how there are times and place to be involved. And also as an investor and a stock picker, people get excited about new issues because if you have the right formula, and I know it's not the exact formula, but I talk about how Dunkin's a little Starbucks, a little McDonald's, the huge expansion plan was a successful IPO. So if you threw it in the draw, because at times it doesn't trade real well, it's something that over years can do pretty well for you. And if you look at Dunkin, you'll see that here is that first pattern, this cup and handle pattern, that wound up giving you a really nice move upwards to, what was this, about 36. Then you had a pretty sharp retracement. Some guys got stopped out. You look at this trend line here. Once it broke this trend, I'm sure this is where a lot of active money got out of the way. This is probably when I stopped following it as close. But then it regrouped. You could have got back involved here when the trend changed again. And then pow, new highs. At this point, I don't know if I'd be chasing up here at 39, but there's no reason why this stock can't get to 43 to 47 this year.
All right, very nice. And McDonald's, not one of the biggest movers of the day, but did manage to close it on a tiny gain. Does it look poised for another move higher?
This one has been just trending higher, and all the money that's in the S&P, it feels like it's getting aggregated in these type of stocks because people want a little bit of yield, they want a little name they know, and McDonald's has been in the key sector. And I haven't traded it actively, but guys keep talking about look at the move in McDonald's. So if you look here, you'll see another nice flag after a big gap. We like to talk about in my swing trading class that if you have a gap that doesn't get filled, it could indicate power to come, and there you go. Now we're at highs. This is why the average investor out there might be a little bit happier because I'm sure they go for these type of stocks versus the high beta names that are hard to handle. These are the names that over the decades have rewarded you pretty well.
Right, but a little more short-term excitement in Panera, which closed up over 1% yesterday. This after a breakout move on Wednesday, took out its prior high. So where's now resistance now?
This is just like trim and trail. We talk about channels and why we love channels because they consolidate moves. You look at this stock right here, Panera, you'll see a really nice channel from September all the way into where it finally broke out recently. This is when you clear a channel, it typically resolves and goes well. Did it right here. Did it right here, did it right there. So this is the most recent one, and if you were involved, look at this nice move. At this point, I would trim and trail. It's very extended from its 8 and its 21, so I would initiate. This just shows you how these type of patterns repeat themselves. Look for them, especially when you see volatility in the overall indices.
And then there's Starbucks, which is now back above all key moving averages. It posted 0.5 percentage gain yesterday to close the day at 58. So what level do you think it needs to clear to get back to its all-time high of 62?
This one's not as extended. But it's so you would say either it's going to play catch up or it's lagging. So at this point, if the rally that we've seen recently the last few days holds in, this one still, has a tight type of pattern that can continue. And if you look here, there you go. I would say above this, 58.50-ish, you can get that next move, and that next move could take you back to highs here. Overall, it's had a really nice comeback. Remember, Starbucks fell from good graces, and then once it broke this trend and cleared this resistance, and then retested it and held above it, and then it came back and tested it again. Goes to show you that stocks could somewhat be reborn if you know how to figure out what pattern that is and get out of it while the noisiness is happening.
Well, from food and beverage stocks to a little interview Scott just got to have with Ceelo Green, who has a new business venture with eDiets. We're going to take a quick preview of his interview, and we'll be back to talk retail.
Here we are in Las Vegas, Nevada, and I have the luxury of sitting down with Ceelo Green, the star of Loberace, a show right now that's taking Las Vegas by storm, a man who's taking the music industry by storm. How do you keep up the pace of that show and that energy all night long?
A good audience is the incentive that any artist would need.
And with all the different diet plans out there, with all the different directions you could have went, why did you choose eDiets?
Having eDiets be a part of my regimen, it's like taking a professional approach to your personal life.
Did you actually see that the Dow Jones made all-time highs in the past week or so?
No, you have to tell me about that. What happened? I'm making some extra money? What's going on?
Well, do you have people managing your money out there in the stock market?
Yeah, I do.
All right, well, that's good. I hope they have a long-term strategic approach.
Ceelo Green!
You had a message out there that you wanted to send to your fans, to people who aren't your fans, just to the world? Like, well, what's your message?
I've seen T3 live a time or two, and I was wondering to myself, is there like a message of your own in there somewhere?
Well, that was just a quick little teaser of Scott's interview with Ceelo. Scott, what was it like to interview him?
I thought it was unbelievable because, you know, here you are talking to a gentleman who's taken the music industry by storm, who's been working really hard for the past 18 years. Everyone says, oh, you know, he's an overnight success, or if someone's really successful, how did it happen? Well, he's done it through hard work. He's done it through pressing ahead. And I really like his message and mantra, which you're going to see on the full version. But the bottom line is we all have very busy lifestyles. We all have a formula we need to follow in order to be successful in our routine, and he has one, just like you have to have one in any business, whether it's finance, whether it's, you know, being a teacher, a doctor, a lawyer, a fireman, whatever it is. You need to have your formula, you need to like it, and you need to work on it, and that's what we all do to try and get ahead.
Very cool interview. I like that a lot. But let's go in the trenches with retail, where money is rotating. The sector is acting best right now. Let's first address JCPenney, which is, of course, in the headlines. The company is embroiled in a legal battle with Macy's right now over Martha Stewart Home Goods. But the biggest headline right now is the departure of CEO Ron Johnson. And shares spiked 10% in after-hours trading on the news and then slid more than 10%. So could this ultimately be a catalyst for this stock? What should we be watching?
I just think it's such a broken chart and a broken situation that there's nothing that could truly excite investors right now except for some traction and a real turnaround story. You know, when he came over, everyone got excited because he was at Apple, the pedigree, and then that was short-lived, and now, you know, now he's out, so I don't think people are going to get excited, you know, to bring old school back. But anyway, you take a look at the chart here of JCPenney's, look at the move it's had from 40, you know, just trending and trending and trending down. So at this particular point, I know it is down. Pre-market traders might look at it to see if there's opportunity for it to go positive. You have a small double bottom here, right around, what is this? This is 1410. I think it's somewhere around this area. I'll look at it versus that area, but I think this is going to need a lot of time. I think it's going to avoid until it proves itself and gives you new levels to trade against.
All right. Well, how about Walmart, which made a new year's high yesterday at $77.44? Will it have power to keep running?
This one last year was my retail stock of the year,
right,
for stock pickers and investors and traders alike. And it worked out well. You had a retracement, and then we started talking a little bit about this one again. You know, after the retracement, we're like, okay, 72 to 74, another key area for it to get back in motion. You look at Walmart here. This is why some indices will not go down because of the weighting that this has. This was that area. This was at 72, and then it pushed, held, and then here was your 74, and now boom, right back to the old highs here. So at this particular point, I don't know if it presses through today, but overall, it's above the 8-day, above the 21-day. It's in a really strong trend. You know, people still are cost conscious and shopping a lot at these type of big box type of places. And you know, the reason why I liked it way back when was not because I'm a Walmart shopper, it's because of this. This was a long-term channel. This was a decade of pain that was taken by people after consolidating this last move. So here you go. This was your breakout, held above, boom, and now it looks like it's on the road to 80 plus.
But you're a Target shopper, right?
My wife does like Target.
I'm a Target fan myself, but Target closed up 0.6% yesterday. It's been stair-stepping higher, even held above the most recent breakout level during the pullback. So should we expect higher prices?
This one too is in the game. Market wants to go higher. Retail, and this name is leading the way. You look here at Target, you will see this is when, you know, there are a few different little trends that it broke here. You know, and then here's where the power came in. Nice little bull flag when it was hugging the 8-day. And then here we are again, a stone throw away from the highs. So I would say at this particular point, just, you know, trade against a 21-day, and this does look like it could extend. It's in the game, and I think if you long it, maybe trim and trail, but you know, I don't see any reason why to get out of it fully.
Now, how about Nike, which got a nice move yesterday, closed up 1.6%, back at the upper end of its range. So is it ready for another move higher?
This one I'm long, and I've been trying to be long the last week or so because in one of our courses we talk about, or my course, about the power of pro gaps, how they usually lead to bigger moves. And if you look here in Nike, you will see, boom, big gap up on earnings, consolidating the gap up, holding it, and now it started to go. So I'm in there, and I think the next level to really watch will be is whether it could take out 60 1/4 and close above it.
And TJ Maxx continues to impress. This is a real standout in retail. It closed on highs yesterday. So where could the next breakout be?
This one, really nice pattern. We've had it in off the charts many times. Charcoal's been all over it. Recently, there's been two different type of moves you could have caught. One was when it triggered above this area, which was about 45. then it held higher, and now it looks like it's ready to go again. So if it can clear this, 47.50 area, I don't see any reason why, it can't continue to new highs. I will say that momentum into 52-week highs has not been the easiest thing to find. So if this does, it could prove that the market still has some power and that the bears better not just be blindly shorting things.
Okay, great. And then there's Coors, which tacked on another 2.4% yesterday, has reclaimed some key moving averages. So now we got to see if we'll get some more upside follow through.
This one's been in the penalty box since the secondary. It looked great, earnings held the gap, and then boom, they got stock shoved down traders' faces when they announced another secondary, and that was right around here. And then once it filled the gap, it took out some of the energy of this name. So it's been slowly trickling down. You still see on a long-term basis, you do have a big-time gap here it's protecting. And then you also see somewhat of a descending channel here. 2 days up, I think they're on some type of road show with some analysts, so we'll see, maybe listen for some headlines that might come out of that. Next resistance here is about 57.69, so see if it can get there, and if it could stay above this downtrend and go sideways, perhaps it gets back in vogue. But overall, very healthy new issue. This also was on my list of my 3 amigos way back when, new issues that could be put in the drawer. Look at the move it's had. So overall, where it is in perspective, not that big a deal. It was Dunkin, and LinkedIn.
Very nice. Well, and finally, Home Depot, which has been helped by the U.S. housing recovery, closed up 1.6% yesterday, helping to lead the Dow higher for the day.
And if you look at this trend, macro strong, intermediate strong, every time frame strong. This you can go all the way back here and look at the trend that it's been going higher. Home Depot, imagine that. Way to play the housing recovery. Anyway, we did imagine that because 2 years ago this was the retail stock of the year. So it just shows you that if you do your homework, not trying to tout anything, I'm saying you can be a stock picker. You can make money in the stock market if you pay attention. So here's this last recent move. It just cleared a prior pivot of 71.05. Here's your next level, and this too is on the road to 52-week highs. I wouldn't trade it with the same type of share size perhaps as it's done during this trend, but no reason why you can't stay with it as it still acts well.
All right, let's do some quick hits here. Regeneron Pharmaceuticals pushed the drugs industry higher yesterday, gained 1.6%. Does look poised for some follow through.
Chart looks good. Use 189 as your action area. Above that, it can go.
Very quick. All right, Boeing reclaimed its 8-day yesterday with nearly a 0.7% gain. What are the levels you're watching?
Boeing, big move on the 2013 predictions above 77. We said 85. Now that it's around 85, maybe it goes to 90.
Keeping it quick. All right, how about Procter & Gamble?
PG off the charts last week. Great breakout. Look at this chart. This is why, again, bears are scratching their head. You're getting big-time moves out of, key mega cap names like Procter & Gamble. Believe it. I heard traders talking about how PG was holding in there yesterday. I'm like, wow, has the language changed? People are talking about Procter & Gamble. They're not really talking about Apple, Google, LinkedIn, and all those as much. So, anyway, this one seems like it can go again above 79.15, and it could continue. And
Hewlett-Packard closed down slightly yesterday. The stock did see a sizable gap down on April 2nd. What are you watching now?
Those who played the Red Dog reversal, which I didn't because I was at the Yankee opening day for my best friend's 40th birthday, so I missed it. Anyway, you go to the chart. Here is that Red Dog reversal right there. You didn't have to know that a big downgrade was coming. All you knew is that this pattern typically is a short sell signal. Boom, gap down. It is holding right now, so it's pretty interesting to see if it'll fill this gap. If you're looking to trade it, if it gets above this 22.48, perhaps you get a cute cash flow trade to the downside. If it breaks below yesterday's low of 21.66, it's got a long way down to the 50-day.
And Baidu was highlighted last week as a potential short. It did then have a 3-day sell-off, managed to close up nearly 0.6% yesterday. So what are levels you're watching now?
I just think it's just trending and trending lower. If you have to trade it, it feels like the shorts are getting more rewarded than the longs, but just realize that every stair step you go down, it's a what is it, a gas slick waiting to be erupted, especially something like Baidu. This was the last time we talked about it, and it did break to the downside. It's still trying to hold on to this little point of reference, but overall, this is one broken stock. Look at this trend to the downside for a considerable amount of time. So if you've been trying to play a bounce here, you haven't been that rewarded. And I would keep it light there.
Yeah, you are not a fan of playing this stock.
No, I used to. It just
right.
shows you have to just move around. Baidu was a great trending vehicle for multiple years, and then once it changes, you have to change.
Right. All right. So how are you approaching today?
Today. How am I approaching today? We're in a key area now. The same way on Friday I was looking to see if 1538 to 1542 would hold to maybe cover some shorts and look for a reflex type bounce. Now I think the bears are going to really have to control this 1562 to 1564 area. If we close above this for a day or two, I would think that shorts would get a little uncomfortable, because then we're really a pebble throw away from the high of 1573. I do see enough rotation into retail, into restaurant names, a nice bounce in some of the bean down sectors of last week, where you can't just have short in the brain, you have to have, trader on the brain, because the longs and shorts are working. I come in today with 5 longs, 1 short. I'm going to see if we do open up and sell down. Maybe I'll add to my spider hedge and be net short if that's what the tape shows me. But I do think that, again, people are choosing longs and shorts, and all these patterns are created differently. Look for which way you want to go, and make sure if you're long being in a strong stock, weak, short, weak stock, don't try and pick a top or a bottom.
All right. And with that said, happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.